Expleo Solutions Limited analyst conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta from EY Investor Relations. Thank you, and over to you, Ms. Gupta.
Thanks, Nirav. Good afternoon to everyone, and welcome to the Expleo Solutions analyst call. The agenda for today's call is to discuss the investors' queries related to the composite scheme of amalgamation providing for the merger of group entities in India under Expleo Solutions Limited. Request to all participants to avoid asking any questions related to the quarter or business update. Representing management today, we have Mr. Ralph Kellison, Chairman and Non-Executive Director, Mr. Balaji Vishwanathan, Managing Director and CEO, Mr. Prashant Damankar, Non-Executive Director, and Mr. Desikan Narayanan, Chief Financial Officer. Balaji will start the call with brief update, and then we will open the floor for Q&A session. As usual, safe harbor clause applies. Having said that, I will now hand over the floor to Mr. Balaji. Over to you, sir.
Yeah, thank you so much, and thanks for all the participants who are joining this call. It's an opportunity for us to clarify any questions that you may have on the scheme that we published and before the meeting that we are going to have for the shareholders on August 2nd. In line with what we had presented over the last 3 odd quarters when we first presented the plan for merger, we are in line with what we were expecting at that particular point of time in terms of growth and in terms of what kind of value that this is going to add to the overall Expleo India as one entity. We had some investments which we had to make in the engineering business to propel the growth that we had last year, which was almost 60% plus growth that we saw in the top line, and for that we had to make some investments. We will answer those questions because that's the kind of questions that we had received so far. But in line with what we have been mentioning over the last 3 investor calls, we are in line with what we were projected to achieve in terms of both the headcount numbers and in terms of what the budgeted numbers that we were talking about on revenue. We should be crossing the $100 million mark this year, and we are quite confident that we will cross the $100 million mark this year. We are in a reasonably good position from a margin perspective once we have adjusted for all the one-time costs that we had incurred last year to make sure that we are able to scale growth on some of the niche areas where we did not have the skills at that particular point of time. So having said that, we'll open up for questions rather than me explaining where we are. I know that you have a few questions on the unlisted entity numbers and also on the expenses and the professional fees and others. So we have Prashant here who could answer part of the questions, and I will be able to answer any other questions that you may have. Thanks so much, and Asha, we can open up for questions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Arnav Sanghvi from Valorem Capital. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes, so I had a question on the post-merger scenario. So, after the merger, do we expect any superior margins or any change in our strategy or product mix?
No. So we had mentioned earlier as well, the technology business has been running the range of around 18 to 20% EBITDA levels, and the engineering business was always running in the 16 to 17% EBITDA levels in the past. And we expect that once the merger happens, we will be in that 17 to 18% once the merger happens in terms of our profitability or EBITDA levels. We don't see any long-term impact on those expected margin levels, of course, considering that we may not really have any other macroeconomic situations as such. But at this particular point of time, we don't see any shrinking of margins significantly from what we had expected, which is a 17 to 18% mark. And in terms of product mix, the listed entity was focusing on technology services always, and the whole purpose of this merger was to try and make it a replica of what we have at the group level, which is an engineering plus digital and technology services, and that's what is going to be our mainstay going forward. And we're not really looking at a big change in the product mix, but from a strategy perspective, our objective is that we will start selling the engineering and the digital services, or the engineering-enabled digital services for automotive, aerospace.
The conference is now being recorded.
We don't see any letdown or slowing down on the best shoring efforts from the Western market into India.
Thank you. The next question is from the line of Shrishti from Monarch Network Capital. Please go ahead.
Thank you for the opportunity, sir. So I had one question on the fact that our technologies sister concern did a revenue of 190 odd million or 190 crores, and our Infosystems did about 150 crores. However, the consolidated incoming entity has done about 300 crores. So there's a difference of 45 odd crore. Can you help me understand the whole financial aspect of this?
Sorry, Srishti. Hi. First, thanks for the question. But I'm not able to understand why you're saying that. So the numbers, as far as the Expleo Technologies numbers, is around 194 crores. Is what the revenue was for last year, and the Expleo Infosystems, which is the Pune number, was around 151 crores, and the combination of these two, which is approximately 345 or 346 crores, is what the total is. All of that will actually move into the Expleo, the listed entity when the merger happens. But of course, the effective date of the merger is from April. So obviously, it will be for the 2022-23 number rather than the 21-22 numbers. But the entire business is moving. So there is no really anything which is not moving as part of the merger. So there is no gap in the numbers.
Okay, so effectively, we've gone from 560 crores in FY21 to 750 merge in FY22.
That's right. 750 crores is what the combined entity numbers was as of March 31st, 2022. And the entire 750 crores will move into the listed entity. So we need to look at what the revised number would be for 22-23. Yeah, 750 crores is all the three entities put together.
Yes. No, okay, so actually where I was coming from in the merger perspective, there's this Expleo Infosystems consolidated revenue.
That is because you see that Expleo Infosystems took over technology in July beginning or June end. So you see only the 9 months number which gets consolidated to the Pune entity. So that's the reason you don't go with that. There's more you need to see standalone, all these put together, you will get that 750 crores.
Understood. Okay, so that's pro rata. So to continue, to follow up on that, how was profit, if you come down to the PAT level, the difference is minimum. So the consultancy fee that the technology company actually has an expense. So is that also what we incurred in the 3-month period for that merger to happen?
No. The consultancy fee is actually a knowledge transfer which we had to do for a specific project. I will request Prashant to answer that in detail.
Yeah. So this is, whenever we start a new capability, we have to invest to make sure that we develop that capability. Certain capabilities exist as part of our group in the Western world. So when we start a new capability, initially we utilize the resources and the knowledge transfer training aspects from our group. This is a one-time expense. So when we project in this particular skill set in future, this cost will not be there because the local capability is already developed. Of course, when we start handling a newer area, this might be seen again. But for this particular capability, this was a one-time thing.
Okay, sure, sir. And so the other question was that the Pune entity took over the Bangalore entity that led to a cash outgo. Did we always envisage that?
Yeah, because the whole purpose of this exercise to make sure that we are on one India. So that's the reason we went through that. Like the engineering, the business, Bangalore business is taken over by Pune, and both together get merged into the listed entity. That was the plan we had.
Understood. So can you just tell the incoming cash that we'll have on our books as a merged entity?
As a merged entity, I can't tell it now because, of course, it will be on the 1st of April. As of 31st March, if you look at it, the financials, we had 155 crores in ESL, that is the listed entity, and 12 crores in the Pune entity and 9 crores in the entity.
Sure, sir. That was really helpful. I'll get back in the queue.
Sure.
Thank you. The next question is from the line of Udit from Catmaran. Please go ahead.
Yeah. Thank you, sir, for giving me the opportunity. Sir, if you can help me understand which geographies are we doing direct business and what is the thought process going forward? Like, in which geographies will we have our direct sales people and where will we be sourcing from the parent? And second is, if you can tell what is the current employee strength as of March 31, 2022.
Okay, so any other market outside of UK and Europe are considered as direct markets. In UK and Europe, we have the group sales team present, and they do the selling, and where we actually do the delivery part. So all the others are direct markets except for UK and Europe at this particular point of time. There are some pockets of Europe which we still do directly, but it's a very small component. It's not a significant large component. So basically Asia, the entire Asia, Africa, and US and Southeast Asia, the APAC region, all of them are actually our direct region. We are not present in Africa in a big time right now, except for Egypt to some extent, but in all the other markets we are not present, in Africa per se. In terms of employee count, we closed 31st March with
4,330.
Around 4,000, little over 4,300 employees.
Okay. And sir, in North America region, is the thought process that all the sales will be done by the Indian entity? Sorry for my voice. Is the thought process that like going forward as well, Expleo India will be investing in the sales there and doing direct business, or the group will also start employing salespeople there to grow their business?
So we will continue to invest to grow the technology business in the US. If you recollect last time, also we talked about when the group is actually likely to invest in the US through an acquisition, which may happen in 23 or 24. But at that particular point of time, there might be a different strategy. But at this particular point of time, at least for the next 18 to 24 months, we will continue to invest in the US to grow the technology business.
Understood. And so, sir, as the group has also expanded its vertical, right? They have expanded into healthcare business. So what is the thought process of growing that division in India?
Sure, I'll actually request Ralph to answer because he was part of that acquisition of the healthcare business in Europe and working on trying and building that capability in other markets as well. Ralph, how would you like to add?
Thank you, Balaji. Probably one even additional information on the U.S. You probably know we have even in the engineering and consulting side go-to-market and sales people and capacity on the ground in North America. But as Balaji said, we will even continue to invest in the go-to-market from India for the technology business. In addition to this regional expansion, we are even focusing even on the diversification of our industry portfolio, and this is even where we are making at the beginning of the year this investment in life science and chemicals, as we even see there on the one hand side the relevance and the importance of our engineering portfolio, the digital portfolio and the technology portfolio. And this is why we made the acquisition with a strong focus at the engineering side. And as we have even done it with the aero and with the automotive business, we are now using the digital and technology capabilities really to stitch together even the new solutions and offerings for this industry. So even this was an acquisition focusing more on the engineering side of our capabilities and the portfolio, and we see now that we will continue to grow this as we are even doing it with the aero and automotive part, but even bringing the technology and digital capabilities to these customers.
Okay. So one last question from my side. So when we do business with group versus a direct business, what is the revenue per employee that we bill, and what is the margins in a direct business versus a group business?
Revenue per employee, actually more than revenue per employee, we basically look at what our realization rates are effectively, per hour, in dollar terms, and we are in the range of around $23 to $24 per hour is what our realization rates are right now. It's a blended rate, but across multiple geographies. But that's what the current rates are. And in terms of what the group business versus direct business, I would say it's almost the same. Group is slightly lesser than the direct market, primarily because there is no SG&A there, and the margins are lower in the direct business than the group business, but the realization rates are almost the same.
Thank you. For this, I'll request you to come back in the question queue for a follow-up question.
Sure.
Thank you. The next question is from the line of Ritesh Chera from Lucky Investment Managers. Please go ahead.
Yes, sir, past calls you have commented about a fairly high growth rate. I think in quarter 4 also we talked about a fairly high growth rate for a combined business. Is there any change there? So the reference point was plus 20% type growth as what we've been doing. So is there any reference change there? And second, net of adjustment, if it would be very helpful if you could give us the FY22 PAT number for the merged entity. If you've given the revenue number is 750 crores, X of that one-off, what would be the PAT number? And this extra expense that you have taken in FY22, from your commentary, is it fair to assume that it will not resurface in 23?
Yeah. So on your first question on growth rate, we continue to expect that we will be around the 20% mark for sure, and we hope to continue that at least in the next 12 to 24 months for sure, unless otherwise there is some major macroeconomic changes which will impact the demand, which we don't foresee at this particular point of time, but if that were to happen. And in terms of what our PAT numbers were?
Combined PAT for all the entities together is around 82 crores.
It's 82 crores, it's around 82.5 crores is what the combined, all the three entities PAT for a 750 crore revenue. And, some of these one-time expenses that we talked about, which is a consultant fee or one-time investments that we had to do in 2021-22 for getting those new business, if you were to do that, it may probably go up by another 15 to 20 crores.
Okay, so adjusted for one time, it is another 15 crores. So
it will be in the range of around 95 crores.
95 crores. And is it fair to assume that this one time was a feature of 22 and is not a feature of 23? Or
that will depend on what the strategy is and what the new opportunities are. In 21-22, we had to invest for a specific client opportunity, which was one of our global clients, and for them there was a capability that we had to build and we had to transfer. Right now, we don't see a similar ask in 22-23, but if there is a similar ask for building a new capability which we don't have in India, we may have to do that investment, which will once again be in one time.
Okay. And the EBITDA that we would have seen in 22 would be a shade lower than the 18% number, right? When you have these one-offs. So
that's right. So we are at around 16.3%. But we still expect, like what I mentioned, even in the last 3 quarters as well, we should be in the range of 17 to 18% going forward.
Okay. And so just last one clarification, the merged entity, what will be the capital base? Or the number of shares, whatever. And your holding would be 75%, right?
71.
70%. It will be exactly 70.1%. 0.1%.
And the capital base?
Capital base will be currently, I think we are around 10 lakh shares. It will increase another 5 lakh shares.
Yeah, it will be around, it will be in the range of around.
Okay.
It is around 10 million shares right now. We should be in the range of around 13.8 to 14 million shares going forward. We will probably get back. I will come back to you in terms of what because that was there in the first.
The conference is now being recorded.
Many sectors, whether it is automotive, aerospace, railway transportation, and few other areas, defense. So this particular project, like what is being getting discussed, in earlier couple sessions, in engineering services, it's mostly a product development kind of work. It's a highly technical work, and it's not that, we have all the capabilities available in India. But as most of the companies are moving their product development work in India, we need to develop that to further secure our business and even secure our global position, which is strong OEMs globally, right? So this was one area where we wanted to develop the capability because it was a significant contract. We invested at one time, and after that, we acquired 2 additional customers in India for the same capability where we didn't have to make that investment. So those projects are comparatively a bit smaller right now, but that's where it started to develop business on the new capability which we developed by making an investment last year.
Sure, sir. Thank you. So I'll just have a few more questions. Even in the other subsidiary, which is the Expleo India Infosystems, and even the technology business, you had said that, the margins reduced because of these one-off costs, and then it will going forward, it will be at 17 to 18%. So, but even the Pune entity, historically it had very high margins, but why has that seen a decline in the last year?
So, see, there are 3 main reasons. One is that we had to make a forward investment in terms of capability and in terms of resources, because we, I mentioned earlier as well, so we went ahead and hired quite a few trainees, to tide over what we foresaw as the demand-supply mismatch in the later half of 22. And in the later half of 21 rather. And that's when we actually had to hire almost 400 to 500 people, and that was spread across multiple entities. While the listed entity hired around 50 odd people, the Pune entity also hired close to around 100 plus people at that particular point of time. And there were also some one-time expenses which we had to incur for the SEZ, we had to comply with certain SEZ rules which we missed in the past, which we had to make sure that we do all of those before the actual merger. So there were some one-time expenses which were incurred in the last year. Both these put together was in the range of around 2 to 3 crores, and that probably was the reason why the margin went down a little. But there was another question sometime back from another investor as well. I just wanted to preempt the next question. The Pune entity actually has a significant amount of group business. So anywhere around 80 to 85% of the business actually comes from the group. And that's defined based on the transfer pricing rules that we have. We follow whatever the taxation rules are, and we have reputed consultants who have actually given us the opinion. And as of now, it's based on that particular number is how the current margins are, and it will continue to be the same.
Sure, sir. And could you just, even in EI, Expleo India Infosystems, it looks like, the top client contributes 26% and the second and third contribute 50 and 10%. Is the top client or group, or could you just name these clients?
These are all from the group. Okay. These are all from the group. So all these businesses are actually primarily from the group. So like what I mentioned, almost 85% of the business is coming from the group.
Sure, sir. And just one last question on, you had spoken about our technologies business and how we are, could you just name some clients who we have in the auto and aerospace industry?
We prefer not to name them, but we have actually most of the French and German auto manufacturers are our largest clients.
Yeah, you can just Google, but like all the French and German auto OEMs, large car makers, they're our clients. And there are only two large commercial aeroplane companies in the world. One comes from France, like you can guess the name. So they are some of the top customers for us.
Sure, sir. Thank you so much. That's it from me.
Thank you. Ladies and gentlemen, we'll take the last two questions from the line of Mr. Aman Vinch from Astute Investment Management. Please go ahead.
Yeah, good afternoon, sir. My first set of questions is on the ER&D business. If you can talk about for FY22, what was the mix between mechanical and digital portion? And we had grown like 60%. So how was the growth in these two business sub-segments? As well as if you can talk about a little bit on what is the typical margin difference and at what scale can our ER&D margin business be better than the company margin, because globally ER&D margins are much higher. So if you can talk about this is the first set of questions.
Okay, so if I look at this ER&D business for Expleo Technologies, in 2021, the split between mechanical and embedded systems or digital, it was 50-50. Because of that large contract we spoke, like a few minutes back. But going forward, or if I look at even 22 and 23, visibility we have, the mechanical engineering will be around 40-45%, and 60% will come from embedded as well as digital systems. Whether they are avionics for aerospace, some of the defense systems, or autonomous those kind of automotive systems. So that would be the split. Second thing, whether the margins are higher on ER&D, it's a different perspective. The margins, as Balaji explained even earlier, so for engineering R&D systems, they're like in the 15-16% range, and digital business was a bit higher, 1 or 2%. So when we combine the whole entity, I think we'll still be at the 16-17% range. So we stick to that. Engineering R&D business has very high profit. I don't think that's a true thing. It's more or less like a percent here and there from the digital business.
Even going forward 3 years hence, you think the margin will remain in this range only, 17-18% in this division?
So see, when you're actually investing in a new business, we expect that we need to do some amount of forward investing. Maybe we expect that the margin profile for many of these businesses will change, but it will also depend on how much of these businesses are acquired directly and how much of it is coming through the group. When it is coming through the group, it will be defined by some part of the transfer pricing mechanism. So obviously there is an extent to which this particular margin can go. But as we start acquiring more direct customers in the engineering business, this margin profile will change.
Sure, sir. Second set of questions is on the employee count addition, which we are currently doing per month, and what is the target for FY23 and 24?
Yeah. So like what I mentioned, we were shared above 4,300 employees as of March 31st, 2022. We expect that we should be in the range of around slightly less than 5,000 when we close March 2023. And between March 23 to 24, we expect that we'll probably be able to add anywhere between 1,000 to 1,500 employees. Our target, I had mentioned earlier as well, our stated objective is that both organic and inorganic, we are targeting that we will be a 10,000 people company by 2025.
Sure, sir. Final question. So Rajesh sir has given an interview in the French magazine about very ambitious targets for the group as well as the India part. So if you and maybe sir can talk about little bit on what are these ambitious targets which the company has set for itself.
Ralph, do you want to?
Yes, I can obviously, and even together with Rajesh as a management team, have worked even on an Ambition 2025 plan. And I think it was already mentioned by Rajesh and by Balaji that we see this growth above the 20% mark in 2022. And we are even expecting to continue with a similar growth rate over the next couple of years. This is even underpinned even within strategic plan that will include organic and non-organic growth, so that we are even expecting to continue with growth rate above the 20% to 2025. And I think when you even look on that we had roughly $1 billion in revenues last year, and you will project this even now over the next 4 to 5 years, I think you even see that the magnitude of business that we would like to generate. And as I mentioned earlier, on the continued expansion in the US and even the diversification in terms of the industry segments we are in will help us to achieve the significant growth rates, where we are definitely expecting to outperform even the benchmark or the peer groups.
Ralph, if you can clarify on the global level, are we targeting, like we had grown quite well last year, so are we targeting similar 15-20% growth at the global level as well?
Yes, we are targeting even 20% at a group level or at a global level.
Sure.
And this will even then translate even into the growth that we will even then see in India. As from a group perspective, we still see this as a largest and even most important location and place where we even then work together with the European markets on project and engagement, especially for European customers. But we even see that we are achieving the growth rates even in the UK and Europe. That was even mentioned in previous by Balaji.
Sure. That is it from me. Thank you.
Thank you very much. And now hand the conference over to the management for closing comments.
Great. Thanks, Nirav. Thank you so much for your interest. Quite impressed with the number of people who were actually there on the call and the kind of interesting questions that you all had. This is actually an important phase for us as we go through this merger and as we go into the next steps of trying and growing the business into the next level. So we'll be a $100 million plus company by end of the year, which is also another big milestone for us. So thanks for your continued support and looking forward to the same going forward as well. Appreciate your time.
Thank you very much. On behalf of Expleo Solutions Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.
Thank you.